Analyzing the chart as a swing trader. Welcome back to my channel, and I hope you are gaining value. I always give a big shout out to my coach. He's an amazing man. Yeah, he really took his time to guide me to make sure I understood the markets to the best of my own knowledge. So today's topic is analyzing the chart as an ICT trader. Sorry, I should have put as an there. As an swing trader. Now, these are the three questions that you'll be asking yourself anytime you're about to go to the market to analyze the chart. Firstly, you ask yourself, where is price currently? Isn't our premium and our discount? Is price in the premium or is in the discount area? Second question you ask yourself is, where is price coming from? And the third question you always ask yourself is, where is price going to? Don't forget your PDRA and also your entry method. This is the PDRA, internal range liquidity is here. If you observe, I put in fair value gap, the normal fair value gap that we all know, but do not forget there are other types of fair value gap: volume fair value gap, inversion fair value gap, and implied fair value gap, targeting the external range liquidity. So internal range liquidity going to external range liquidity. This is how I analyze stock analysis. It's very easy when you write this down to analyze the market. As a swing trader, sorry. As a swing trader, you start with 1 month, right? You start with 1 month. Then you do 1 day, do one month, 1 week, do 1 day, then 1 hour entry. Some individuals will tell you 1 week, 1 day, 4 hours. Some individuals will tell you 1 month, 1 week, 4 hours. It's still the same thing. It's just that you must backtest to know what you are doing on your chart. Now, if you look at this monthly time frame, right? Ask the question, where is price currently? This is the last swing point that was created as external range liquidity on 1 month, right? You draw your line here and write, you label it external range liquidity. That's buy side liquidity on 1 month. Meaning market has gotten to what? Gotten to, I forgot to add this also. On your chart, right? Always make sure that you're looking at two scenarios. You're looking at the left hand side of your chart, to the right hand side of your chart. This mistake was what I was always doing for a very long time. Left hand side to right hand side of your chart. You're not focused only on the right hand side, but on the two section of the chart. You want to know what market is doing and why market reacted in a particular way in a particular place. Now, if you look at the right hand side here, we have what? We have an internal break of structure here. Let me look at this line here. Okay, that's not a break of structure, but what do we have here? We have a fair value gap here, and if I measure it from this high, from this low to this high, 50%, right? Consequent encroachment, which market got to and is reacting down, but we'll confirm that on a more lower time frame. Now, if I use my Fibonacci from this swing point to this swing high, it will show me that price is at where? Price is at discount, right? But look at this area. There's a fair value gap that price has to go and fill up around here. There's a fair value gap that price has to go and fill up, but also it's at what? It's at a premium level. So price will have to come down to this level to as low as what? To as low as this other block here, because what other block is at 50%. But actually, we have a fair value gap that price cannot just leave. I had to learn this the hard way. When I lost money a lot, I learned this the hard way. That when price leave a fair value gap, price always come back to come and fill it up. Now, for price to take out this high, this other fair value gap has to be filled. It might be filled and continue. It might do this. It might do this just to fill it a little and continue, or it might come and take out this low below. But we are just watching to see where it's going to head to first. This is just for 1 month. We don't really know what the lower time frame will do, because the more the lower time frame, the more we know what the story is telling us in the market. I come down to 1 week. I'm in my 1 week chart here. I ask the same question, right? I will delete this. I will just know that here is a 1 month zone that markets might react very funny in around this area to this area. I'll come again. Where is price currently? I can see that on this area here, Price is what? Price has taken out external range liquidity as our buy side liquidity on 1 week. And what do I have there? I have what? I have an order block. Firstly, you are asking your question, is there a breaker block here on your right hand side? No. Is there a mitigation block? No. Is there an order block? Yes, an order block around here. Is there another block? Yes, there's another block here. Is there a rejection block? I can't see any there. Is there a fair value gap? Before you mark your fair value gap, you take what? Your Fibonacci from this low to this high. And at my discount level, since price is on what? On a bullish scenario, there is no fair value gap under 50%. Is there a liquidity void? I don't know if you guys can see what I'm doing. Is there a liquidity void in that area? No, there is no liquidity void. So what is valid here is just an order block. So I'm expecting price to come down to that area and clear out this range around here. Buy side liquidity. Now, if price, right, before you can take this trade around here, price has to violate this low because we're in premium on 1 month, but on 1 week we're what? We're in discount on 1 week. Until price break this low, can we decide to take any trade in this area from 1 month? On one day, you ask yourself the same question you ask yourself on every time frame, you ask yourself again on this chart. Now this is 1 week. Let me label it as 1 week OB. Before you can take your buy from this 1 week OB, there must be a change of character on one day. A swing point must be violated on one day. And from what I can see here, this is the closest swing point that must be violated on one day for me to continue my buy from 1 week scenario. Sorry. That swing point must be violated for me to be able to continue my buy from to continue the buy from 1 week time frame. But on one day is still bearish. So what happened? I'm still bearish. Because why? On one day, this is zone, this area here is a swing point that was external range that was taken out. But if you look in here, a sell side liquidity was being taken out around here. And what do we have here? We have a mitigation block and we have a breaker block, and we have what? An inversion fair value gap here also. An inversion fair value gap around here. You can see price reacted there. We also have a mitigation block. We have a breaker block, but it's not on premium level. So what are you doing? You will go as low as until this swing point is being violated, right? You are still what? You are still a bearish momentum. Now I'm going to delete this. You can see it has been violated. External range liquidity being taken out. Sell side liquidity being taken out. The rule states that if external range liquidity is being taken out, price comes for internal range liquidity. Fibonacci from the high to the low. This is what we have, a swing point here from the high to the low. I will measure this swing point here also, since market has shifted structure from around here, from this high to this low. And you can see that price did not get to 50% of this zone here. So indirectly, I'll be afraid to take any buy from here. I will still doubt myself a bit because why? I know that price did not touch 50% of this area, not even the OB or the main threshold. So indirectly, I will still be worried because it might be a form of inducement on 1 day time frame. Then let me put my line here. The only zone you can see here, this is on 1 week time frame, right? 1 day has shifted structure. I might still be worried. But what am I seeing here? 50% here. I have an order block here from 1 day. Let me delete this box here from 1 week. I'll put a line there from 1 week OB, not to confuse you. Being a swing trader is very sweet. Then I will measure all I'm seeing on 50%. I will look for what? I'll look for my Fibonacci to measure the candlestick main threshold, and I would put a line there as main threshold of the OB. I'll delete the Fibonacci now. So what's in my discount is what? The OB is too big. What's in my discount is mean threshold. Can you see? Mean threshold of the OB. That's what can you see price touched it? I will come down to as low as 1 day, as well as 1 hour. 1 hour is where I look for my entry. As long as this has touched 50% of my entry, some people might decide to take their trade here. Those that are doing SMC will say, oh, fair value gap and other block. This is a sniper entry from here. But being a conservative trader, I'll wait for a shift in market structure on 1 hour. A shift in market structure. Okay. The shift in market structure took place here. There's an external range liquidity taken out here. This is liquidity. And the shift took place here. MSS. You might take here as MSS because here might be a mitigation block, or this might be what? A breaker block, because what? A liquidity was also taken out here. Now, there's another problem again. For your entry, we buy low and we sell high. Then if you drag it from your point from here to here, that's not also 50%. Even from low here to here, that's not 50%, which will get you worried. There's high tendency that price might still come down, and there's tendency that it might keep on going out. But me, I won't take that trade. But some individual might decide to take the trade as the breaker block here and keep on going up. But for me, I would not risk it. I would let it go. I will start a form of inducement. If I come down to my 4 hours, you see the shift to market structure there. But what are you seeing on 1 week, right? So you don't get yourself confused. Market did not respect us, market still sold. But don't forget that this black line here, I told you, this whole line is coming from 1 week. It's coming from 1 week. I'm deleting everything now. Market has hit my stop loss, right? Market still respected me, took external range liquidity on 1 day. But what will happen? I would not still take as taking this trade, because why? The OB, the entry would have given me a lot of stop loss. Meaning I wouldn't have even seen any trade to enter, because I would have waited for it to come here and to now have rested my zone. Now, what happened? If you look at this level here, a swing point was being violated. External range liquidity was being taken out there. Can you see? Sell side liquidity. And what are you looking for? If you come down to 1 week, on 1 week, what happened? This swing point I showed you as the OB has been violated. This I do your top down, I forgot to say something again. When you're analyzing your chart, don't forget there was a costly mistake I did not make. Price came up and touched this fair value gap. Because anytime you see price touch a fair value gap and is going up, there's high tendency that it's going to go and push down. And you can see what happened. Price got to what? That fair value gap from 1 week. And what happened? It pulled down, taking out external range liquidity. Now, if you look at this chart, you're only selling for now, right? On 1 week. On 1 day, what are you doing? You're just selling. Now, price has touched this line I showed you coming from 1 month and has shifted market structure from here as a breaker block, right? As a breaker block on 1 day, you will mark your zone. What are you waiting for? You will take that entry from 1 hour. Some people will tell you 4 hours. It's just the choice. You wait for a shift in market structure and use the story of power of three. Try and take your trade maybe on Tuesday or Friday, but avoid Mondays as form of liquidity. Avoid Mondays as your form of liquidity. Avoid Mondays as a form of liquidity. You're with me, right? Avoid Monday as a form of liquidity. From Tuesday and above, you get good trade setup. Now, market has shifted structure around here. It's a risky trade, but I will still take it because normally the rule is buy low, sell high. And I'll put my stop loss here. I'm violating my rule, but it's at breaker block. Normally, I'm meant to measure my Fibonacci from this low to this high. Sorry. I'm meant to take my Fibonacci from this low to this high. This is a zone of 1 month. I'm not afraid. I'm not scared. All these zones, I will delete them. All this area, market has violated them, so I'm going to delete them. Delete. Now, how do I told you that you should look at the left hand side and your right hand side. All these areas will become draw on liquidity. There's a draw on liquidity here. There's draw on liquidity here. There's draw on liquidity here. So I'll be careful around that environment, extremely careful around that environment. And I can take my entry here and target the next draw on liquidity. That's why I love swing trading. It's kind of easy for me. I will just target the next draw on liquidity. That's the blue lines that I fixed. Can you see? I'll target the draw on liquidity. And indirectly, what have you done? You've done 1 to 5 or almost 1 to 6. You see how easy it is, right? That's why I like swing trading. It's very, very easy for me just to navigate the chart. So I hope this is very explanatory, even though the video is long. Kindly bear with me. But just practice it, follow the rules. Fair value gap, you are targeting in making price in fair value gap and a change of character takes place there. You're targeting the external range liquidity. That's how beautiful and sweet ICT is. I hope it's very impactful. Thank you very much. And don't forget to subscribe. Bye.